Hello folks, what's up my people? It's been a while without talking guys. JD's back. Welcome back to FX Beethoven Forex Argo Recorded. So today we're going to talk about manipulation, mitigation, direction. This is the language of candlestick. If you want to understand the price action, if you want to understand the way market moves, watch this video. It will save you a lot. Reading the candlestick, understanding how the candlestick moves and why candlestick behave in a certain way. Make sure you subscribe, make sure you like the video, make sure you share to your friends, make sure you leave your comment guys. Show me that you are with me. I'm back again to share you something very crucial. Let's get started guys without wasting our time. Okay guys, the language of a candlestick, manipulation, mitigation, and direction. So, before we talk about manipulation, mitigation, and direction, first of all, you need to understand what a candlestick is. A candlestick is simply a visual representation of buying and selling in a marketplace. Hope you understand. It's a visual representation of what is going on in a financial market. Hope you understand. So here, you already know a candlestick have open price, high, low, close the price. You understand it. That is the basic thing every trader should know before you watch this video. So according to the market, or according to the market argo, so basically, market is always seeking what? Market is always seeking a balance between buying and selling. Market is always seeking a balance between buying and selling. Please understand this first of all before we continue. Market is seeking a balance between buying and selling. Market is trying to regulate harmony between a buyer and a seller, if you think in terms of supply and demand. Okay, so I mean in the real market, right? So if we have a high supply, price is gonna go down. If you have a high demand, price is gonna go higher. So we always think balance in the market. So you understand. So here we have a bullish candle, which is this one, gray one, and you have a bearish candle here. So as long as this candle has the same body, open price and the close price, open price and the close price, they are aligned together. And the candlestick wicks, highs and lows, are also on the same level. This is when you have a balance between buying and selling. Anything other than that has created imbalance. Anything other than that can be judged as imbalance. Hope you understand. This is the first step to understand what I'm going to talk about today. Hope you understand. So anything above this is going to be imbalance. Hope you understand. So we have two candlesticks here, guys. This candlestick has created the balance. So we call it a draw. There is a draw. There is no winner. There is no loser here. Right? So if we have any other candle like this, for example, we have what? In the forex market, you're going to see a candle forming. Simply understand what you already call engulfing candle. You understand? But there is a message behind that. If we have something like this, you have bullish candle, which is here, and you have a bearish candle here. If you look at here, this candle traded higher above this candle and went down, breaking the low here and closing all the way here. So if you see it with your own eyes, you can clearly see the selling candle is longer, is bigger, and has what? Has engulfed the bullish candle. So there is a message. So if we are seeking balance, or if algo is seeking balance, why do we have a candle trading higher, trading above this area, and make reversal trading lower? So if this happens, this is what we call, we have got imbalance. The same here. If you have what? If you have a bearish candle and you have another bullish candle trading lower, for example, it doesn't have to trade lower. You have to understand there is a reason I've given you this these drawings. It doesn't have to trade lower, but as long as you see a candlestick trading lower, basically it doesn't have to trade lower. Understand that. As long as two candlesticks, if you come back here, as long as two candlesticks are not equal in terms of body, in terms of wicks, those candles have imbalance between them because they are not equal. They are not equal. By this time, you will see some candles trading higher, trading above, make a reversal, and then trade lower. You will see other candles trading lower, make a reversal, and close here. You can see that. So as long as you see something like this, it's a type of imbalance, but with what? With a manipulation. With a manipulation. With a manipulation. Which means here, this candle, market was pushing higher within this candle. Market was pushing higher within this candle. Let's say market was pushing higher like this. As long as the market reaches this area, it creates a little pullback. This week, this candlestick week, right? It creates a little pullback. Then it continues to go higher. After going higher, once it reaches this area, it makes what? It makes a reversal like this. It makes a reversal and it closes here. Have you seen? This is what we call a manipulation in a forex market. This is what we call a manipulation in the forex market. But what is going on here? Why do we have this type of behavior in the forex market? It's because we have, as you always say, we have smart money. We have big guys behind this movement. I always tell you, this world is controlled, guys. This world is controlled. This is why you do not have to believe in the concept of supply and demand only. No. Saying that things are happening because people are buying. These things is controlled. The world is controlled. Hope you understand. The world is full of manipulation. So here, they are trading higher. After trading higher, they drive price down. So this is a form of manipulation. So we call it a manipulation because we have what? We have orders resting on this candlestick high. We have orders resting in this candlestick high. So whenever you see a candlestick being manipulated like this, understand that institutions are joining the market. This is the only way we detect that institutions are joining the market. They are joining the market. The true area for their entry, the true area for their big orders, they are already there because they are using their algo to move the market. You understand? But here, as long as you see this, prepare for a big move. If they've been taking liquidities here, and they say that it's over, it's time to go down. So what would be your expectation? Your expectation is that the next candle is supposed to be bearish. The next candle or the next move is supposed to be bearish. What do I mean? I mean the next candle may open and it comes back to mitigate, as long as they are done performing what? Manipulation. Remember, manipulation, mitigation, and the direction. They are coming back to mitigate their orders. There are people who are being taken here, and people who are being taken here, it's over, they come back to perform a break-even of their orders, and then they move price to the downside. If they are not ready to mitigate these orders, they may create a strong trend to the downside, and then they will come back later. Remember, as I always tell my student, mitigation is a process. Mitigation is a process. So they may leave these orders and they continue to go down, and then later they come back later, right? Like after 4 days, for example, if you are on a daily time frame. Or they may even come after 3 months. So you have to understand that mitigation is a process. So the science is, how do you know they are going to mitigate, or how do you know they are not going to mitigate? Right? That is another science. Right? So first of all, understand this concept. Understand, as long as you see this, immediately you have to think about bearish movement. Think about bearish movement. The step number 1 here. Okay, maybe I can say step number 0 is this one. Understand the draw. Understand the theory behind the candlestick. They are seeking a harmony. So why do we come to mitigate here? Because there is something wrong here. There's something wrong here. There is imbalance. They want to remove that imbalance. So this is what we call mitigation. Mitigation is a process. Repeat after me. Mitigation is a process. I hope you understand. Internalize that. Internalize that. Mitigation is a process, guys. I don't know how much I can express this. Mitigation is a process. Now here, you are going to see another candle manipulating the bottom, break the structural high or the high of it, and it continues to go higher. This is another type of imbalance. This is imbalanced movement. So here, the buy wins. As I said, wins here. The buy wins here, meaning the movement is bullish here. The direction is bullish. Remember, manipulation, mitigation, direction. Those are the 3 things you have to master. So here, direction, we use this to identify how the next candle is likely to behave, how the next move is likely to behave. So if you see this, understand that the next candle, let's say this is a yearly candle, understand that the next year is likely to be bullish. The next year candle is likely to be bullish. Save that in your mind. I will give you examples. I'll give you examples, and it will surely change the way you read price action. Hope you understand this step before we move on. Hope you understand this step before we move on. Make sure to like this video and subscribe. Make sure to check video description and join our Telegram channel so that you can follow us as we keep updating our platform. So here we have another thing. I told you here you may have this type of candles. By next time, if you are reading price action here, this step is what we call a negation. A negation. That a negation is kind of movement that will contradict what you have seen here. That will contradict what you have seen here. For example, if you open any chart, start using something like this. As long as you see a wick to the downside, this means we have, let's say for example, you have a kind of structural resting here. Structural is manipulated. So you see this kind of wick. Immediately, you have to understand that institutions are trying to manipulate this zone and they're trying to go higher. This means a bullish move. There will be a certain movement that will be bullish. So market continues to go higher, trading a certain level, and then you see another bearish candle rejecting the top. Rejecting the top, manipulating the high. Look at this. Manipulating the high. See that? Manipulating the high. This means institutions are entering here. They are trying to buy this move, but once price reaches this area, they are negating this movement. They are negating this movement. They are changing their mind, if I can say. Maybe they see there is not enough liquidity, for example, to move price higher, so they negate the move, they change direction to target the other side of the market, or the other side of liquidity. Sorry. Hope you understand. So this time you are bullish here, this time you are bearish here. So your expectation here is to see another bearish candle like this. From here, you've been expecting a bullish candle that will go higher, but once it reaches this area, it is starting negating, crossing down here as a bear. This time it will be a bullish, then it returns bearish like this. Returns bearish like this. So they are negating what? They are negating this previous move they have created here. Hope you understand. So this is one example. The next example, you have this pattern here. You have this pattern where we manipulate the top and we break a structure. Then after breaking the structure down here, a new candle start. A bullish candle start here. A bullish candle start here. Trade lower and reject the bottom, manipulating what? Manipulating this low. So once we see that, and it goes high. Once you see that, before it even reaches here, once you see that, expect that this high is likely to be taken. This high is likely to be taken. If this high is gonna hold, you will use your time to see that. That is another science. That is another science. But if you look down here, if you remember this structure in the forex market, this one, let me draw it here on the top. You see we are trading ranges, guys. We trade ranges. So you are seeing a structure, high, low, high, low, high, low, high, a break of structure. So you see a break of structure like this. And then you are ready to do what? You are ready to sell the market right here, for example, for a deep pullback. So as market is returning back, market is this area, gives you signs of what? Sign of sell, and then the market continues the move. Market continues the move. Do you see that? Do you see that? But if you change this structure into one or two candlestick here, one or two candlestick here, you end up finding what? You end up finding For example, you have what? You have got a candle manipulating the top and the bottom, and then you see what? You see a negation below. You see a negation below. You see a negation below. You see that? You see a negation below. Hope you understand this. Hope you understand this. If I have to draw this so that you can understand, I can do something like this. I can do something like this. I can do something like this. If you are quick at reading price action, you immediately see what I mean. You immediately see what I mean. Hope you can see that. A new candle opens. This was creating a move here. It opens, manipulate the top, as you can see. Sorry guys. You have a structure, this one closed here. Wait. This is the main structure we have. Because it is very small, you never know the move the candle will be making. Because seeing a single candle doesn't mean to move like this, to make even trade lower, consolidate or whatever, and it still created a structure, as you can see. Now, you see you have got a break as it is pushing down, and then you are going to sell here. You are planning to sell in this level. Then you are manipulated again. You are manipulated again. So this is happening because you have no idea of this science, how to read the language of candlestick, how to read the language of candlestick. So it was manipulating the bottom. It was negating the previous manipulation we have here is telling us that we are bearish. The next time, a negation follows. Another manipulation to the downside, meaning we are bullish. So this is likely to be taken. This is likely to be taken. So you understand? The same here. You have a manipulation to the upside. To the upside, meaning we are manipulating the bottom to go higher. This is what we call manipulation to the upside. So we are manipulating the bottom. We are manipulating the bottom in order to go higher. Manipulation to the upside. So here, once the market is done manipulating this move, we are preparing what? A bullish trend. But once another candle opens here, it trades higher, maintaining the same move, and then it starts rejecting the top, manipulating the high, and then it goes and breaks this structure low. This is a complete negation. So where is a negation zone? Negation zone is here. A manipulation zone is here. All of them are a manipulation. Understand? All of them are manipulations. You have to understand. But this one is negating what? This one is negating this. Is negating the first manipulation. You understand? This is why you will see this type of structure in a forex market. For example, you will be seeing, for example, you may open your chart and you start seeing you are in downtrend, guys. For example, let's say market is gonna create a redistribution. For example, market is going to create a redistribution here. Market is going to create a redistribution. A breakout structure, a pullback, for example. You think you are going to go higher. Market is doing what? Market is creating a redistribution. market is creating a redistribution to move price down. To move price down. To move price down. So you are going to see this type of patterns. You have to start detecting it before it happens using what? The concept of reading manipulation. Manipulation, mitigation, and direction. Hope you understand. So since you understand this pattern, let's use a chart, and I try to show you guys. I will try to show you guys how to read the candles, guys. How to read the candles. So here we have a good structure here on the GBP and ZD. So in terms of order flow, for example, you start from here. You may see, for example, this structure. And you see this retractable block of structure. And then you think, because you have seen this retractable block of structure, you start thinking that you are going to sell all the way down to create what? To create a deep pullback within this range. But GBP and ZD is not ready for that, as you can see. Okay, so the next time you have what? You miss this move and you keep marking the structure. So you're gonna say this is your structure high, this is your structure low. You've got a break of structure here. After break of structure, you have your range structure going on. Range structure. If you didn't watch my videos, my previous videos, please go back and watch. Because if I say a range structure and you don't understand what a range structure is, you need to go back and watch those videos, guys. So this is a range structure. You can go and check a video, talk about anatomy of a range. It talks about what a range is, internal structure, range structure. So you have got range structure going on this area. You have a high, low, high, low, high, then a BMS or a BOS here. A break of structure. A break of structure. So you are thinking how market is gonna come back here into this level. Then you are planning to sell on this area. But this is what happens. Market instantly taking you out and it continues a trend to the upside. So why is this happening? Why is this happening? So if you are reading candlestick, make sure before you mark anything, make sure you start from a high time frame. Remove the noise, because this is the noise. Make sure you start from higher time frame. Make sure you start from higher time frame. So here you have what? You have price trying to manipulate the top here. If you look left, there will be liquidity. This candle will be trying to manipulate. Let's start from there. Let's try to understand that is manipulating. So here, this candle tries to push price down. Try to push down. And it is succeeded because, as you can see, we have had a movement going down from here all the way down here. It's a bearish move. We have kind of bearish move from here, basically to the next candle right here. So as you can see, after reaching this area, another candle, this bullish candle after this one, opened took the low of the previous candle and immediately rejected. Immediately rejected. Once you see this, expect that this high, a new candle that will start, is likely to take this high and this high. This is how you can build your bias. You understand? It's likely to take this high and this high. This is a manipulation. Institutions are not ready to go down. They are manipulating price to the upside. They are performing manipulation to drive price higher. I hope you can see that. You can see this retreat to move that happened. This retreat to move that happened until we hit this area, a liquidity to target. A buy side liquidity to target. Then look at this next move. Look at the next move here. A new candle here, if you follow carefully here, look at this high we have here. This high, after grabbing liquidity, it rejected. A signs that institutions are pushing price down. So what do you expect? What do you expect? This means the next candle is likely to go down. The next candle is likely to go down, as you can see here. I mean this area. The next candle is likely to go down because this is the highest point you have as of now. As you are marking this area, is likely to go down. This return move is what I'm showing you. This return move I'm showing you here. Look at here carefully, what I'm telling you, first of all. Understand this high we are talking about is this one. As long as we change the candlestick, you see. This is the high we are talking about. After manipulation, this is the high we are talking about. Is rejecting. It was rejecting a new candle start. If you put like vertical lines within this candle from here and here, you'll probably see what I mean. You can see. This is the true candle. Manipulating a new candle start. This is the one I'm talking about. Once a new candle start in this line, new candle start, maintain the what? Maintain the move to the downside. Here, this candle, that opened here. This bearish candle, maintaining the move all the way to the downside. Then we have seen another push going higher in this area. Another push going higher in this area. Where is that push? That push is here. You may not see it clearly because when you change to another candle, the details disappear. You have to be smart at reading this. So this push was negating this movement. This push was negating this push. So we have another push to the outside. So if you have seen any break of structure here, for example, and you are thinking of selling from the top, you are wrong. So we are pushing higher. The candle reached the top. As you can see, it reached the top. After reaching the top, it will start pushing down again. This is what we call a self-negation. A self-negation. I didn't show you that, but when you have what? When you have one candle, when you have one candlestick with a strong high in the low, a strong high in the low. Let's say this is what? Let's say this is a bullish candle, like this. It has a strong high and a low, like this. So this candle started, if I ask you, where is the next movement? After seeing this candle, the next movement should be bearish. Should be bearish. Should be a bearish move. should be a bearish move. Why? Because you have got what? Manipulation to the down to the upside. Market is manipulating the bottom in order to go higher. Once market reaches the top here, it is start manipulating price to the downside. Have you seen? Meaning, after this push, this is where institutions are entering the market. So meaning the next move is gonna be bearish. This is what we mean. It's gonna be bearish. It's gonna be bearish. So interesting point is here. This is what I want you to focus on here. You see, we have had a push to the upside. We have another push to the downside within the same candle. Within the same candle. Meaning the next candle here, the next candle from this candle, the next candle is gonna be bearish. And yes, it is succeeded. It is succeeded, as you can see. Look at this price action. After this candle, pushing down, negating this move. The next one, this candle was bearish here because it pushed the price down. It pushed price down. If we start from here, you can see. After this movement from here, once a new candle opened, it traded down before it reject. Have you seen? Before it reject. So before you mark any structure, make sure you understand this concept. It will save you from being taken out, from choosing the wrong bias. So this is a rejection to the upside. You see, we have a push to the downside, meaning the next candle is going to be bearish. And yes, it is succeeded. It became bearish. But what happened after being bearish? Also, this candle immediately negated this move. It negated this push. This was a manipulation to drive price down, another manipulation to drive price higher. Start. As you can see, it manipulated the bottom. This candle manipulated this one in order to go down, and this one also manipulated the low in order to go higher. As you can see, this is a manipulation to the upside, meaning the next candle has to be bullish. Has to be bullish here. You can see, look at here, we have a high. This was a buy move. It's a bit, you have so many candles going on here on the raw time frame. But here, what I want you to know here, if you see a break or structure, if you mark a structure and you see a break or structure here, and you start thinking you have a bearish range, you will be taken out. You will be taken out. If you think you have a bearish range here and you want to sell from here, you will be taken out. Look at this in the raw time frame. Do you see what I'm showing you? Do you see that? You see that? So this was a true break of structure. This is a true break of structure, as you can see. In terms of range, we are supposed to wait what? A pullback in order to create a deep pullback within this range. We are trying to validate the price so that we stay away from being manipulated. So here, this is a range. Look at this. You have a high, you have a low. You have a high, you have a low. If you have watched my previous videos about two ranges, you have a high, you have a BOS to the downside. A BOS to the downside. A BOS to the downside. So this is what? This is a bearish range. So what do we expect? A pullback within it so that we come back here. I mean, you wait for a pullback in order to create a deep pullback here. Right here, in this area. in order to create what? A deep pullback in this area, as you can see. Now, here, you are planning, you go to H4 time frame, you have got a clear range. Do you see what I'm telling you? You've got a clear range, a BOS to the downside. So this is a pullback. You are going to lose your money right here. You will be selling because you've got a bearish range based on the concept of order flow. You will be targeting a certain liquidity resting here, waiting market to trade in your sponsored candle sitting here. So you are going to short the market here. You're going to short the market here. Stop loss on the high. And you will be stopped out. You will be stopped out here. Have you seen? Why is this happening? Why our range is failing? Because this break or structure was inducement, was a manipulation. This was a manipulation because you have got a negation. The first manipulation was here on this high. This was the only sign that was telling us that the market is willing to come back here. Market is willing to come back here. But after breaking this low, the institution negated the move. They negated this manipulation. Okay, they changed their mind, if I can say. They changed their mind. They changed their mind. Do you see it, guys? Are you guys growing? Are you guys loving this? Hit like, subscribe to this channel, share, leave your comment, check in the video description, join my Telegram channel, guys. If you understand. So this is it. They are negating what? They are negating their manipulation, their first manipulation. This was a clear sign that we are bearish, that we want to trade lower. But after breaking this structure, they negated the move. They negated the move. If you understand? They negated the move. Do you see that? You said here, you are taken out because you have no idea about what is going on. You have no idea about what is going on. This is your BOS, a pullback. You want to sell, not to come back here. You are taken out. Because we have a strong negation. Institutions are negating this move they have created here. This was a manipulation that they are going to do what? To come back down. But they negate that move. Do you get it, folks? Okay, now, if we keep on reading this candlestick, you will be surprised here. Look at here. If we keep on weekly time frame here, they negate the move. By this time, they come back for a retest. This is, once you see a negation, you see a push, you see a manipulation, you see a negation. This negation succeed in breaking the previous negation through bias to the outside. Institutions are buying. They were able to negate their previous manipulation, and they broke it. They didn't only negate it, they broke it. They are not interested in driving price down. So you are bullish. Whatever you are doing, you are bullish. Look at this. Rejection to the outside. Manipulation to the outside. Manipulation to the outside. The next candle to be bullish. Do you see that? until it negates. If this candle, for example, what would be the future move? If this wick closes, negating this one, negating this candle. If this current candle crosses negating this one, you have to look for a sell to come back here within this little range of this candle being negated. But understand that it's likely to be respected. Expect another negation again that will form here, so that you keep following that movement. You keep following that movement. Go to the time frame. Look what was going on here. A manipulation to the outside, to the downside. Candlestick are going down, going down, going down. Do not change your time frame, guys. Stay on the same time frame. If you decide to study daily, stay on daily time frame. One candle to another. Another push. They are going down. Negation. They are going down. You see, look at the range they are playing in. Look at this. With a beautiful structure. With a beautiful structure. I have a beautiful structure on this level. So if you are asked, for example, on H4, to show us, if someone asks you, please show me the direction of the market. Are we selling? Are we buying? Are we selling here? Because I've got a little break or structure. What is the direction? You cannot find direction if you start from ranges like this. You need to study those candlesticks, how they are manipulating, how they are negating each other. And then you get what? You get a true direction. You get a true direction. For example, prices here. Are we selling? For example, are we selling or not? Yes. Here we are selling, for example, if you are able to spot this manipulation before it happens. That is the science for our time frame. You see this? Manipulating the high and then pushing down. Crossing here. A new candle start. This one. A new candle start here. This candle is manipulating what? Is manipulating this one. Is negating this previous manipulation, is negated here. Look at the closer price. Remember the drawing we have used. Look at the closer price. They are negating this previous manipulation. So what is the direction? Direction is to the upside. Direction is to the upside. So immediately market succeeded in breaking our structure high because we are bullish. A little pullback, market continues to maintain the move. But again, these candles are many. You can use weekly candles are enough. This strong rejection tells something. Strong rejection tells something. This is it. This is it, guys. Are you loving these videos? Are you loving these videos? Okay, guys, share. This is JD together. You can join my Telegram channel, guys, by clicking the link in the video description. Make sure to subscribe. I'll be updating again, sharing you some stuffs that can help you guys. If you need more details about this, you can still message me on the Telegram. Then you can talk, guys. So this is it forever. FX Bitcoin forever. Forex Argo decoded. See you guys. See you soon.